Have you ever had that burning question about money? It really doesn't have to be that complicated. So we're here today to answer some of your questions about money.
What's the difference between a traditional IRA and a Roth IRA?
Well, most people pick the Roth IRA because you don't pay any taxes on the dollars when you take the money out. So think of like your retirement plan at work, your 401k plan, your 457 plan, your 403b plan. What happens? When you put money in, you get a benefit today. So if you write out a check and you put money into a traditional IRA today, you possibly, most likely, get a deduction on your tax return. So you get a benefit today. But what happens later on? Fast forward, you get into retirement, you've got to pay state and federal income taxes on your retirement plans at work and also the traditional IRA. The Roth is the exact opposite. So if you write out a check and put money into a Roth IRA, you don't receive any benefit today. No benefit. You've already paid income taxes on those dollars. But whatever that Roth IRA grows to, any of those earnings, when you take that out in retirement, you do not pay a single cent of tax. That's why it's so magical.
Then why doesn't everyone do a Roth?
Because there are income limits on the Roth IRA. If you make a certain amount, in the government's eyes, you make too much money and you cannot contribute to a Roth IRA. But to even make it more complicated, there's what's called a backdoor IRA, which you could contribute to a traditional IRA and then convert that money every year over into a Roth IRA. It's complicated, isn't it?
No. Not when you talk to someone like you, okay? So can everyone do the backdoor IRA?
Everyone can do the backdoor IRA. It's just a question of is your tax situation and what makes the most sense, and do you want to pay taxes on those dollars today to receive the benefit later on?
So when you want to invest in a Roth, for example, and what companies are available? Is it the same as if you're just going to buy stock individually? You can buy it through the umbrella of a Roth?
Yep, absolutely. So think of a Roth IRA or a traditional IRA like a Ziploc bag, and you can put anything inside of there. You can put apples, bananas, pears, you name it, and you can put all of that stuff in there. Or you could have one bag that's just pineapple and one bag that's more aggressive, one bag that's more conservative. So in your Roth IRA, you could have individual stocks. You could also have mutual funds. You could have real estate investments. You could have CDs. You can be as aggressive or as conservative inside of that account. Just think of it like a Ziploc bag, and you can put anything in there.
So let's say I put money into a regular IRA this year, right? Traditional one, okay? And I get a tax benefit from it, okay? So then we invest, everything's great, and then I convert it to a Roth IRA, right? So I've already received a tax benefit going in. Now it's in a Roth, and I collect on it many years later, and I pay no taxes?
Right. But to get into a Roth, you have to pay taxes on that money. So what's very common is, let's say you worked at a company, and because I did this, I worked at a company and I left that company and I had a 401k plan. I moved that. When you have an old 401k plan, you move it to a traditional IRA because you don't pay any taxes. And in an IRA, you can invest in anything. Well, then what happened is I took that money and I converted it over to a Roth. When you do that, whatever that dollar amount is, you have to pay income taxes on all of those dollars in the year that you do it.
Oh, so it's not such a good deal, is it?
It isn't. Yes.
All right.
And that can be any.
That makes sense.
I mean, I had a client 2 years ago that she had $300,000 in a traditional IRA. All of a sudden, she lost her job, so she converted all of that money in 1 year, paid income taxes on those dollars, and then from here forward, anything that she earns on that account, she doesn't pay any income taxes.
All right, that makes sense. There is no loophole.
There is no loophole. Sorry.